morning, welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast coming from Princeton, New Jersey. Today is Wednesday, March 18th, 2009. It's 11:30 a.m. Eastern Daylight Time in the U.S., 3:30 p.m. in London, and it's 9:30 a.m. in Mexico City. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our instant mail address on AOL is CATEX-TV. We have a bit of breaking news. It's a pretty busy news day, actually, with the AIG hearing going on Capitol Hill. But this just came in from Reinsurance magazine. Apparently, Willis chief executive, the broker Willis, Joe Plumeri, has offered staff cash incentives to cut their working hours in a bid to trim costs. This is being revealed by Reinsurance magazine. According to sources inside Willis, Plumeri told staff at the Willis building, presumably the one opposite Lloyd's in London, that he was looking for volunteers to work 4-day weeks for less pay. It's also understood that an internal email had gone out to Willis employees in February informing them of the same thing, but after a less than lukewarm response from Willis staff, Plumeri has now sweetened the offer, offering cash incentives in returns for blocks of unpaid leave. Reinsurance continues on this. They understand that one of the ideas is that staff taking a month's sabbatical can earn 30% of their salary for that period. A number of market sources told Reinsurance that Willis's move may hurt the broker in the long run with regards to account servicing. However, there is a general agreement among London market brokers and underwriters that the Willis move might safeguard jobs, even if it is only for the short term. That's pretty striking news, actually, for a company that just paid an as of yet undisclosed amount to have the Sears Tower named after themselves. Now to our main news. Today it's continuing ire over the AIG bonuses. U.S. Treasury Secretary Timothy Geithner late last night vowed to cut government aid to AIG by an amount equal to the bonuses that are being paid out. In a letter to House Speaker Nancy Pelosi last night, he said that Treasury will deduct an equivalent amount, $165 million, from the latest $30 billion slice of government aid granted to AIG. Geithner also said the government will require AIG to make a separate $165 million commitment to pay Treasury through cash flows from its operations. Geithner said Treasury has begun working with the Department of Justice to explore ways to recoup the bonus payments made to employees in AIG's Financial Products Division. Additionally, Geithner said that the government plans to explore ways to accelerate the process of winding down the insurance giant's operations. Thank goodness. The letter is Geithner's most public response to the outrage over the bonus payments. Geithner said he shared President Obama's, Congress, and the public's outrage, and reiterated the government's stance that nothing could have been done to prevent the payments. He also detailed the process that led government lawyers to form their opinions and suggested that public ire toward AIG CEO Edward Liddy is unjustified. Liddy, of course, shown here, is scheduled to appear before the House Financial Services Committee any minute. Chairman Barney Frank of the committee is in fact swearing in each of the witnesses. So it's unknown what Mr. Liddy is doing now. We had thought he would be up first. However, he is not up first, whether or not he's consulting with his attorney in the face of swearing in, which of course can lead to perjury charges if anything is not quite valid insofar as what's being given as testimony. So there's a busy day going on there. We'll find out more. And also, later today, it's quite possible that New York Attorney General Andrew Cuomo will obtain the list of the 70-some employees who received the bonuses. If that list is made public, we may come back on the air and slowly begin to recite the names. In the United Kingdom, there's a shoe that's dropping as well about financial services and overhauling the regulatory structure. That's the so-called Turner Review, or the Turner Report. UK insurance companies and their overseas operations could in fact now be subject to coordinated international regulation if Mr. Turner's suggestions are in fact followed. According to the review, quote, prudential oversight of financial institutions should ideally be coordinated in integrated regulators, reducing the dangers of inconsistency between different authorities within one country. It also went on to talk about how investment banks and banks frequently end up blurring the distinctions between each other. It noted that the troubled U.S. insurer AIG was deeply involved in the credit default swap market, taking trading risks similar to that facing an investment bank, but was subject to an insurance regulatory regime rather than a bank trading regime. The report noted that currently the supervision of banks and other financial service firms is, quote, entirely in the hands of national supervisory and regulatory authorities, and that the level of supervision varies by country. Mr. Turner's report continues saying that any future global agreement on regulatory priorities should include the principle that offshore centers must be brought within the ambit of internationally agreed financial regulation. The report contains a dissection of the recent worldwide economic crisis. It blames governments, regulators, and financial institutions for putting too much faith in the efficiency of markets. Some of the key points from the reports also include a recommendation that regulators be able to extend their powers to institutions that become bank-like or become so important that they threaten stability, such as hedge funds. It also recommends codes on remuneration for the UK and on a global level. It said that regulators need to look at pay to ensure that pay does not encourage excessive risk-taking. Some quotes from the reports that are very interesting. Quote, there is a strong prima facie case that inappropriate incentive structures played a role in encouraging behavior which contributed to the financial crisis. The very complexity of the mathematics used to measure and manage risk made it increasingly difficult for top management and boards to assess and exercise judgment over the risks being taken. That's about as plain as you can get. In the UK now, nearly more than 2 million people are out of work in Britain. This is the highest unemployment rate in 12 years. The unemployment rate rose to 6.5% in the last 3 months of '08. This is according to the Office for National Statistics. The number of unemployed people increased by 165,000 over the quarter, 421,000 for the year. 2.03 million Englishmen and women are now out of work. The International Monetary Fund has forecast that the British economy will contract by 3.8% this year and shrink another 0.2% in 2010. It says that unemployment will also likely increase. A policymaker at the Bank of England believes that the jobless rate could climb to 10% by the end of the year. In the United States, some news on mortgage applications. They've increased last week as lower borrowing costs have led to a surge in refinancing. The Mortgage Bankers Association's index of applications to purchase a home or refinance a loan rose 21% in the week ending March 13th. It's the highest number in 2 months. The group's refinancing gauge jumped 30%. The lowest interest rates on record are enticing homeowners looking to lower their mortgage payments as the labor market deteriorates. Still, however, mounting foreclosures are pushing down property values, further depressing household wealth. In the U.S., the average rate on a 30-year fixed-rate loan dropped to 4.89%. The World Bank has cut the forecast for China's economic growth for the balance of '09, but said that the country remains in good shape to keep expanding despite the global turmoil. In a quarterly outlook released this morning, the World Bank cut its forecast growth rate from 7.5% to 6.5%, mainly due to the falling demand for Chinese exports. However, the bank said China would still grow faster than other economic powers due to the large government stimulus package and strong banks, which were relatively unhurt by the economic crisis. According to the report, China's exports have been hit badly, affecting market-based investment and sentiment, notably in the manufacturing sector. The World Bank forecast, though, is well below the minimum 8% level that China's leaders say is needed to hold the country's jobless rate at a manageable level and avoid conditions that could trigger civil unrest. We'll go to a commercial break shortly. Just a word on tomorrow. James Mills will be doing the news. There's a Willis Research Forum organization meeting down at Princeton University.